Simon, we were having a discussion last hour, just about this idea that at first, you see churn more from kind of live TV towards streaming, and we're still in the midst of that process. But eventually you will see more competition between people churning between different streamers. Where do you see us in kind of this life cycle of streaming at this point in time?
I think it's a very clever move by Disney. They were at the right time to raise their prices. They've got traction in the market there by, depending on whose definition, you're the number 2 streaming service globally. I know that they are now at 221 million subscribers if you factor in ESPN and Hulu, plus the Disney Plus service versus Netflix at 220 million. So again, it depends on whose definition you're going with. But it was the right time. They needed to raise the price point. I think the service justifies being at the higher price point. I think it's clever to have the ad-funded layer. And I do see those 2 services, Netflix and Disney, as the clear number 1 and 2 at the moment, particularly in light of the comments last week relative to Warner Brothers and HBO Max and the pullback in their commitment to that service.
Yeah, the market, of course, seems to be moving away from this idea of subscriber numbers and eyeballs, more of a focus toward profitability. You've got ads, new revenue streams, tiered pricing, higher pricing. What does this shift mean for investors? Is this enough to satisfy them? And similarly, what does it mean for consumers?
Look, as far as the investors go, I think you only need to look at the share price today for Disney to say, hey, this is a chance for everyone to just breathe out, relax, say, there's more revenue coming in, there's new revenue streams from the ad-funded layer. So I think it's a positive message. I think the market's a little bit overreacting to how positive it is. I think it's still an extremely competitive landscape. I do think the Disney brand is a little bit overvalued. I listened to Jim Cramer just a couple of hours ago, and certainly I understand the passion that people have for Disney, but it was only last night that I was watching Luck, which premiered on Apple TV Plus, which was produced by the former head of Pixar. So that's John Lasseter, and he produced that with Skydance, which is David Ellison, who produced Top Gun. Now that didn't appear on Disney Plus. That appeared on Apple TV Plus, which is a real change in the landscape of kids animation. So everyone needs to be mindful of the fact Disney doesn't own this space exclusively anymore.
Yeah, Simon, we talk a lot about the ultimate economics of this business when we sort of really know the landscape. And as somebody who ran content acquisition at Netflix, I mean, at what point are we going to know what the right budget is for a company to actually maintain and have continued profitability based on its subs? I mean, are we there yet? Are we going to see a downturn in what there is a willingness to spend on some of this content?
Sure. And look, I didn't run all of content acquisition at Netflix. That's certainly Ted Sarandos, and he continues to do that job as well, being co-CEO.
You were a director,
today.
though.
Yep, absolutely. But speaking about Ted, they came out on their last earnings call and said 17 billion, that's the right number for us. That's a happy level, and we can stay at that level and produce all of the premium content that we need to for the next few years. The only possible pain point there is if they need to start to step into these sports rights or into a new genre, because certainly sports rights is something and a category where Disney's differentiated themselves, but that's an area where the competitive landscape has risen up in front of ESPN as well. If you look at Apple TV Plus having the Major League Baseball rights, you look at the success that Amazon is having with the NFL. So again, a very competitive landscape. 17 billion is the right number for Netflix right now, and probably the top tier of the content spend, provided again that they don't get into any new content genres.